The U.S. Congress had that kind of risky behavior by banks in mind when it came up with the Dodd-Frank Act. The landmark law is designed to prevent the toxic conditions which led to the 2008 financial meltdown. But 4 years later, the rules within the legislation are still being rolled out. Our Washington correspondent, Ryntjes, reports.
In the years leading up to the last financial crisis, the US mortgage industry had been chasing dubious profits by approving risky mortgages and then selling them off in bulk bundles to be traded as if they were secure financial products. Wells Fargo Bank avoided such practices, strengthening its reputation for solid financial management. Its former president and chief executive, Richard Kovacevic, argues that more regulation is unnecessary. Regulators, he says, just needed to do their jobs.
Everyone knew this was happening. Don't listen to anyone who says this was some secret. No one could have known what was going on. Everyone who was in the industry knew about it. As I said, I mentioned it to regulators over a dozen times.
The Dodd-Frank Wall Street Reform and Consumer Protection Act requires that traditional deposit-holding banks avoid risky trading. Additionally, a group consisting mainly of government regulators, the Financial Stability Oversight Council, or FSOC, has been set up. It must identify systemically important financial institutions, commonly termed too big to fail. This goes beyond banks. Insurance giant American International Group, or AIG, received $182 billion from the US government to prevent its collapse. The FSOC has begun designating AIG and other non-bank firms as well.
So up to date, they're designating firms as systemically important, and that means that banking regulations will apply to non-banks, which is kind of problematic for business reasons. Insurance companies aren't like banks. They don't have demandable deposits. They're in a different line of business.
The FSOC is still working on how to tailor regulations appropriate to these industries and how much additional capital they should hold. Many in the financial industry say they are therefore dealing with a cloud of uncertainty over the process being designed here in the US Capitol, particularly over the criteria being used to decide which firms are too big to fail. Ryntjes, CCTV, Washington.